So I received a request to make a video sharing my thoughts on a realistic price prediction and analysis for Vtho. And so here it is, but before we get to that, be sure to subscribe for monthly crypto giveaways and fresh daily content as well. So the first point which I'd like to address is that we have to remember that Vtho is primarily the fuel of Vechain's platform, and so in order to use Vechain services, as a company I'd have to accumulate Vtho, and so there is a trade-off between increases in the price of Vtho and growth in the Vechain platform, because as the price of Vtho rises, it then makes it more expensive for potential customers to use Vechain services, providing that they need the same amount of Vtho to do so. And so a low market price of Vtho in the short term is actually a good trade-off to make, because by selling our Vtho dividends for a low price now, we are incentivizing new partners to join Vechain and for existing partners to increase their use, and this is creating more long-term demand. The way in which Vechain should eventually work in my view, so that we can eliminate the trade-off between increases in the value of Vtho and at the same time not putting off potential customers or disincentivizing existing customers, is to increase the Vtho dividend which VET produces in line with growth in demand for Vtho. You see, by increasing the number of Vtho produced by each unit of VET in each dividend, the VET owner is getting more VET at a lower price rather than less VET at a higher price. And so if Vechain can regulate the dividend properly in this way, then the value of the dividend for the VET investor would be the same as it would otherwise be. But also on top of that, we'd have the added benefit of not having a rising unit price in Vtho. But in my opinion, and people may disagree with me on this one, which is of course perfectly fine, the price of Vtho should be kept low for the meanwhile, and the reason as to why I think that this is a good strategy is because while blockchain technology and more to the point the market which Vechain operate in, namely supply chain analytics, is growing rapidly, they should be trying to get as much market share as possible, as rapid growth won't last forever, and when the growth begins to slow down to a substantial degree, then in my view is the time to increase prices. During the 1990s and 2000s, Amazon lost a lot of money, and I think that they did this because they charged prices which were so low that on the whole they were losing money. But because the internet and e-commerce were growing so quickly at the time, they were as a product of their ultra-competitive pricing, gaining a significant share of the growing market, and they then continued to serve those customers well and build brand loyalty, and well, we know how the story panned out. But the key point is that on balance, the strategy worked very well. And by the way, the strategy isn't always a good thing to do, as it's dangerous for a business to have negative or even very low cash flow. But in certain situations, I for one think that this strategy is justified. And I think that in this particular situation, with Vechain operating in supply chain analytics, being a cryptocurrency and using blockchain technology in a revolutionary way, they are operating on a cross-section of multiple rapidly growing spaces, and therefore in my opinion, short-term sacrifice is worth the long-term growth and retention of partners. So you see, as for a price prediction for Vtho, we shouldn't be considering this question in the same way as we would for VET or Bitcoin or so on, because Vtho has a completely different purpose and is designed to be the fuel for using the Vechain platform. And what I think that we as Vechain investors should be thinking about is the total value of the VET dividend. As mentioned earlier, we don't want the price of using Vechain's platform to be so high that it's putting off potential partners, so it may be wise to increase the number of Vtho per dividend to try and keep the price of using Vechain services reasonable and appealing to customers. But even in this scenario, the value of the Vtho dividend would be the same as before, we just have more units at a lower price. As a VET owner, personally, what I want more than anything in the Vechain platform is a maximization of the long-term income-producing power of VET, and whether those dividends are spread across a small or large number of Vtho, I don't particularly care. What I care about is that the total value of the dividend grows over time, and the way that the dividend will grow in my view is by incentivizing existing partners to use more and potential partners to become partners. And so again, personally, I don't mind that the dividend is low in the short term, so long as the sacrifice is repaid and then some. Anyway, that's all for this video. If you enjoyed my analysis, be sure to subscribe to the channel for more content like this. Thanks for watching.